is a stop share. I'm going to go ahead and make Eric Garrison the host. Now, Eric, I want to edify you real quick so that the folks who do not know you get to know you now. Guys, Eric Garrison is an 8-figure trader. He's been trading over 20 years. He's absolutely phenomenal. He's amazing. He's become a great, personal friend of mine, a business partner, someone who is on the team. He's been here over 18 months inside this company. He's been educating people literally all over the globe. He had a goal to create 1,000 millionaires. Guys, he's already created 56 millionaires already. So who wants to be part of the 1,000 millionaires that Eric Garrison wants to create? I want you to put a me, M-E, if you guys want to be part of that 1,000 millionaires. Because look, I've already done it. I want to help you guys do the same, okay? So without further ado, Eric, we're going to go ahead and turn to you, brother. Appreciate you being on. Can you hear me?
Yes, I can hear you. Can you hear me?
We can, just fine. Take it over, man. And if you need to do a screen share or whatever, you're good to go.
Okay. I don't know why I can't see myself, but I'm still here. So I was going to, let me make sure you guys can see my screen. Hold on. Can you see my screen?
Yep, there you are, man.
All right, perfect. So I wanted to cover a few things tonight. I'm getting a lot of just amazing people contacting me. Very excited about the direction that things are going with iMarkets Live, with the bounce back strategy. We have just endless people just having just tons of success from the strategy, and I'm very grateful for that, because my full intentions with this deal was, to affect a few people, but I didn't realize how big it was going to get. And so it's absolutely been a blessing to me. And I like it because the fact that it's a simple strategy, it's something that people can duplicate, and people can generate, very large wealth from this by duplication. So what I wanted to do tonight is, I'm getting a lot of people since we launched the new page. I'm getting a lot of people saying, hey, I'd like to be able to cover as much as possible on the PowerPoint presentation again, because some of the people are getting a little bit sidetracked with that. And I just wanted to make sure that everybody could, benefit from this and be able to see everything that I'm seeing, and that I have some new indicators that I have added to this as well. So what I'm going to do is I'm going to cover the old, I shouldn't say the old, but the PowerPoint presentation I've already had. And then what I'm going to do is I'm going to show a couple of other indicators and the reason why I added those to the whole system now, just to make it even that much easier and also that much more precise. So I'm just going to go through the PowerPoint with everybody. I know this is maybe a little bit redundant for people, but I feel it's important so that people can see it again, since we are recording this. And I just want to make sure that everybody has all the tools that they can have on the site, and then we can cover this. So I created it. Initially, this was called the red light, green light strategy. It's what I've always called it for years and years and years. So several different groups have approached me, and they wanted the bounce back strategy, and another group like the G7 for the Garrison 7-figure strategy. I don't care what anybody calls it. I still call it the bounce back now, and I like it. So, of course, risk disclaimer, there's risk in everything. There's definitely risk in trading Forex. It's a well-known thing, you guys, in the Forex industry, that 95% of people lose their account within a 1-year period. That is a statistical average. You can Google that. It's out there. And what we've done is we've gone in and we've created something to help prevent that. Not to say that it will stop it, but it's to help prevent that from happening, because we want people to make the best choices that they can in getting into a trade. So I've covered that. Now, the first part of this, you guys, is I always take just a blank chart, and I use the 50-day moving average as my middle ground for any of my extensions up and my extensions down. So anytime it moves up, it recovers and goes down to the 50-day. Anytime it goes down, recovers back up to the 50-day. goes back down, recovers the 50-day. Since I built these charts, and I'll upgrade the charts now since the market has moved quite a bit, I'll keep adding to this and tweaking things around for people. We've had a full recovery on the pound Canadian. It moved up, and then since then it's starting to pull back as well. But it went right back up to that 50-day. So the 50-day moving average is my center line, you guys. I build my charts around the 50-day moving average. Just so everybody's clear of that, the 50-day is the center part of all of my charts coming together, because I'm trying to make the best decisions for turnarounds to either come down or up to that 50-day. I've included the settings right here. It's a period of 50. It's easy. It's MA is simple, apply to close, and I do the blue. Then after that, I go in and I do the 20-day moving average. The reason why I add the 20-day moving average is because it takes the last 20 days worth of time period to create the movement of the line. You can start to see now that the line is starting to move down towards the 50-day. It's starting to move up towards the 50-day. This is consolidation. This would not be a good trade. It's sitting on the line. We don't want that. We want to see it move away. Now you can see it's moving away. So the 20-day is my second part that I add to this, just to start to show the momentum shifting. We're building charts to show the momentum shifts. The next part that I add to this is the 10-day moving average. And you can see as the 10-day moving average is moving up, it's arcing over and it starts to cross the 20-day. So technically, you guys, this is what I'm looking for. I'm looking for this part of the trade down to the 50-day. Now, did it extend, consolidated and extend down? Yes, and I'm going to show you how I trade to catch as much as the trade as possible. Same thing here. You can see that cross started to happen, moving up towards that 50-day. Crossed away from the 50-day, moved back down. So you can see I'm building the charts around that. Here's the setting for the 10-day. Now I start going into adding what's called the Parabolic SARs, you guys. So the Parabolic SARs stands for, it's a PSAR. And there's a lot of people that call it different things, but I call it the position, stop, and reversal. And you read a lot of things about the SARs. There's a lot of really good information out there on the internet about the SARs. And what the SAR does, you guys, is the candle actually comes down and either breaks the lower support or comes up and breaks the upper resistance level. Okay, so it breaks, it's looking for those moves, these moves, and these continuation moves like this. So what happens is when you get the breaks on that, it starts to say, okay, we've had an exhaustion in this direction. It's starting to break the lower level, and it's starting to move through that down to the lower period, the lower time frames. Now, a lot of people ask me, do I draw in support and resistance levels? Sometimes I do, you guys, but the way that these charts are built, it's all about duplication, and it's all about consistency. So when you see these moves on the duplication and the consistency, you know those averages are going to be there, that are going to go in your favor. So you can't just do it with one SAR, you guys, because one SAR can fake you out. So I add a combination of SARs. I added another one recently, but I'll show you the next one I add. I add the 0.02, which is the green SAR. So the green SAR, and the reason why this strategy got the red light green strategy is because when the red dot first pulled up, that would be going onto my watch list. So anytime that I had a reversal that was forming with a red dot, which you see here, the red dot, that would go on my watch list. So I'd create a watch list just on my phone or whatever it may be. I'd create the watch list based upon the red and the green dots forming. Once the green dot formed, that was where I'd enter my trade. So once I'd enter my trade, then I knew, okay, then I've got to manage the trade as it's moving along. And so then I would manage and move my stop losses based upon the SARs as that momentum started to move down to that 50-day moving average, which is right down here. So you can see if you catch this entry here, you're catching that entire move down to the 50-day. Now, once it gets to the 50-day, you guys, you can get out of it there because you made a nice profit, or you can tighten up your stop losses. So when it starts to drop through the 50-day, you can catch the remainder of the move down and just move your stop loss along with the SARs as you're moving it along. It comes down to the bottom. you get the reversals, and you'll see that this is a continuation back up. So that's not just enough in my mindset that to create the chart around, although that's how I used to trade on that. But in iMarkets Live, I've learned some really amazing strategies from Christopher Terry. But one of them that I really like that he follows, you guys, is the Bollinger Bands. The Bollinger Bands are extremely powerful, and how he sets those up, which is new to me. So see, even though I've been trading for 20 years, you guys, I'm still always learning. I'm still a student, and I'm still learning things. So I learn from what other traders are doing. Well, what happened was when you in the harmonics, in the back office, you guys, he talks about how to create his settings for the Bollinger Bands. So once I started adding the Bollinger Bands into my trades, it just got that much better. You can see we have a reversal. It's pulling away from the Bollinger Band. It went into the Bollinger Band. It's pulling away. There's your entry. This comes down. It comes into the Bollinger Bands like this. It's sitting on the Bollinger Band. Starts to break away. There's your entry. This even came up almost to that Bollinger Band. Didn't quite come into the Bollinger Band. So you could take it and still catch a bit of a move, but then you caught the consolidation down for a lower low. You know, that's how I'm using the Bollinger Bands in this. But I don't just do one. I do an average of 3 minimum. I have built charts with as many as 6, but I like at least 3 because you can see how it goes into the Bollinger Band. So you can see it's pushed up into here. It's pushed up. The further it pushes up into these Bollinger Bands, I'll add the third one here. You can see it pushes up into them. You get nice reversals breaking away from them. So remember, the Bollinger Band, you guys, is like a rubber band. As it pushes up into it and pulls further away from that 50-day moving average, and when you get that confirmation of a reversal, the stronger that move is going to be down to that 50-day moving average. Vice versa. Further it comes down here, the more powerful that move is going to be coming up to that 50-day moving average. And I'll show you examples here, you guys, in just a minute on some of the charts that we've been following for the last couple of weeks. You're going to see how these moves have worked out. They've been absolutely amazing. So that right there at that point, that completes what I call my upper chart. Now I start to build what's called my lower chart, where I go in and then I start adding the MACDs. So the MACD that I typically have been going with is a 12, 26, and 9 MACD. Now, the reason why I like the MACD is if you look at it, it kind of represents and looks a bit similar to like what you'd see how the Bollinger Band would be, where it's pulling away from the Bollinger Band. You can see how this is moving down away from the 9, which is the 9 is actually the trend line, the line itself moving away. This is coming down, it's moving away. It's coming up, it's moving away. It's coming down, it's moving away. That's helping determine a reversal up to that 50-day. Here's the move up to that 50-day, down to the 50-day. Same thing. You can see that separation is forming. So that's one thing I add to it, and that's the MACD. Here's the setting for the MACD, the 12, 26, and 9. Very simple setting. Then I come in and I add what's called the stochastics. So the stochastics are institutional and individual momentum changing in the markets, you guys. So when years ago I used to trade a lot for large accounts and different things like that, and so I would follow the stochastics just regularly, just almost like religiously, because you can see the momentum shift is happening in the stochastics on the institutional side, and then the individual, meaning us, the regular customers, would start to follow that momentum would change, the volume and the momentum change would happen. So you can see that's what you're getting here. You're getting those crossovers that are happening. Comes down here, it's consolidated, you start getting crossover with separation. Comes up here, you get a crossover with separation. Down here, same thing. So it almost becomes repetitive over and over and over again. You guys start seeing the same setups over and over. So the other thing I add to this too is I add what's called the relative strength indicator, the RSI. So I like the RSI because anytime it's above or below the 0 line here. So if it's below, it's oversold. If it's above, it's overbought. We look for the flips. I like the flips. That's the momentum shift that's happening. Comes down anytime. See, it went clear back here for that momentum shift starting to move up here. Comes up here, gets the momentum shift coming down. Down here, same thing. You start getting those flips. Now, do I just trade off the RSI? No. That's not a big indicator for me. I actually have traded for a long time without it, but I like to just have it on there now because I can see a very distinct flip or V pattern that forms on that. And I use it as a RSI 10 instead of a 14. Standards 14. I like the RSI 10 because it flips a little quicker. So that I can see that that's a momentum shift that's happening in the market at that point. So that now basically, you guys, completes the chart setup. Very, very simple chart setups. Not extravagant, not real hard. It's color. I mean, I'm a very visual person, so I like the colors. It's worked good for me for so long. But you can see, you get the entry. There's your trade. That's your trade right there. You're looking for. Did it go further down to the Bollinger Band? Sure. So if it comes down to the 50-day, you tighten up your stop loss. If your trailing stop doesn't get hit, guess what? It breaks down through and it goes down to the lower Bollinger. As soon as it touches the Bollingers, that's where I'm typically out. As soon as it does, and I wait for the next setups. This comes down here. Well, you can see here, you got the same separation. So when you line these up from top to bottom, you want a similarity looking. You see those reversals forming. Same thing, it comes down here. You get the separation forming. You get your entry here. Look at that big, beautiful move right up to that 50-day. Comes up, same thing. Here's your entry. Comes down right to the 50-day. You get your separation that's forming. You get the trend down. And vice versa, right back up. So it's just an up and down, and up and down, and up and down. And that's how you make a lot of money, you guys, is, you know, a lot of these traders go out, they're drawing lines, and they're drawing reversals, and they're drawing all this. I just trust my charts, because if you go back and you look at this, how many times, if you entered the trade, does it go up and would it hit above the stop loss? Didn't there. Comes down here, didn't here. I mean, it's just consistency over and over and over again. Do you hit every trade as a winner? No, you don't, you guys. You will occasionally get one that will hit your stop loss. I mean, I was figuring out the other day, I did 37 trades, and I've had 4 stopped out of 37 trades. But that's, well, now I'm probably around 24 to 2,500 pips into about a 5-week period. So I'm making a lot of pips. Very few stop losses get hit, but the pips are made in the trend. The pips are made in these moves, and it's all about building them and working with them. So that gives you an idea. Now, a lot of people are asking me about a new settings that I have. I'll show you that on my live charts here in just a second. So I use what's called the Easy SAR. This is a free app, you guys. You can download this on your phone. You can set up your settings to what you like to have as your watch list. I watch a daily with a 4-hour entry. My daily is my trend. My 4-hour is my entry. So meaning I want my daily to be moving one direction and my 4-hour to be moving in the same direction as the daily. If you see this is moving down. I want my 4-hour to look similar to this. This is moving up. I want my 4-hour to be in the same move, up and down and up and down. So my reason why I use the 4-hour is it gives me the best possible entry. And I use the Easy SAR for this because when I break it down, I monitor about 20 pairs on the SAR list. And what I do is I just simply highlight the 4-hour and the daily. And you can set that under your settings on the watch list. So you can set it up so anytime, let's say the AUD CAD, the Parabolic SAR pops up, it's going to give you a 4-hour alert. Now, there are times where the 4-hour and the daily will come up at the same time. It does happen. It doesn't happen a lot, but if it does, then you know, hey, that is a definite trade to look at because you'll get an alert for the 4-hour, you'll get an alert for the daily. That is momentum, either whether it's up or down. Those are the trades that I really look for. I mainly take the trades off the daily and then break it down onto a 4-hour to look at them. That way I'm monitoring it along. This is the new settings too. So I'm going to show you really fast. I've added, you'll see on this is the settings that I had before. So if you took this orange one off, you guys, I normally would just have the green with the red, but I've added the orange, and the reason why is because the Easy SAR app, you guys, when it sends out the alert, it's basing it off the 0.02, which is the orange. I like the 0.03 and the 0.06 because the green gives a quicker flip When I mean flip, it means that the parabolic SAR either moves above or below those entries quicker than the 0.02 does. Although I put the 0.02 on there because that is what gives me the alerts on my SAR app. So that's the end of that. Now let me go back to my charts here really fast. I'm going to go back to, okay, so for some reason tonight, you guys, the Trader's Way harmonics are not working again. I don't know why. I sent in a question to them, so I'm not going to really focus on the harmonics right now tonight. I'm going to focus on just a standard regular chart, how I have the chart set up. So you can see now I've added the orange SARs in here, okay? The reason why I did that is because of the reason of this of the SAR app doing the flip. I've also adjusted my MACDs so you can see how the red is going up, the red is coming down with the green. Now, the green, when I had this set up initially, it was 12, sorry, when I had this set up here, you can see, I'm just going to show you, I've got it as 920, but you can see I had 12, 26, and 1. I used to have it as 12, 26, and 9. So what I did is I said, okay, well, people were having a hard time understanding this. I want to make it simpler. So what I did is I did an overlay of the 12, 26, 9. I changed it to 12, 26, 1, and then I put a 9. So you can see now it says 9, 20, and 1. So what that is it's the same type of look as, let me see here. Oops. Hold on just a second. Let me get my other. As this was looking like, you can see instead of having the line like this, I've actually eliminated that now, and I just have the colors. Now, does it mean you guys have to use it this way? No, you guys can use the old version if you want to. I just like it because it makes it a little more simple. I can see that the green is now starting to move down, and I'm seeing the red. I'm starting to see that momentum shift happening in that pair. And you can see, I follow the pound yen. I mean, I always follow the pound yen. This is one of my very, very favorites. I've been telling people for weeks, like, look, we've consolidated up above here. We're going to get a move right down. And what did it do? I entered here, and I got that break on it. I'm still in this trade now, and I'm up about 400 pips on it. I'll write it right down because I know I'm very confident it's going to go down and hit that lower Bollinger Band. So I'll write that down and just keep my trail stop moving along with it. But I entered about here. So yeah, it's about 400 pips up. So if it goes down and hits the Bollinger, that's almost 550 pips on one move that I've held for, I don't know, maybe 2 weeks, you guys. Here's the Euro Pound, same thing. We had a bottom that formed. We had the cross. Here's our entry. If you guys follow my other classes or my other things that I do, you'll see that my alerts, my weekly forecast, we've been in this trade now for a while. I'm confident enough it's going to go up there and hit that 50-day. That's 130 pips. Pound Swiss, same thing, you guys. We've all been playing this. Everybody that sends me messages, you guys, which is fantastic. Everybody's, I can't believe how well this is done, and they've just been following along. We had a clear back here. The momentum was down, and we're working ourselves right down to there. So, I mean, we're about 250 pips on that. Euro NZD, same thing. We had that move down. It's actually touching almost the Bollingers. So I would look at this and go, I'm going to probably step out of this because you can see we're starting to get a momentum shift here to start moving back up. Dollar Swiss, same thing. I don't play dollars, the US dollar very often, you guys, but this is pushing up into the Bollingers. Waiting for it to start pulling back, get a crossover and come back down. It's stretched quite a ways away from the initial. If we come back here, let me see here. We're pretty far up right now. Yeah, we're about 200 pips. So even a 50% recovery pulls it back down to here. But there's a chance that that's going to break and come back down. I've got it on my watch list. And the same thing with the Swiss yen. We're pushing down into the lower. You can see we're way oversold right now. I'm just waiting for that momentum to shift, cross, get the alert, and then head up to that 50-day moving average. So that's about 200 pips. So that's what I do, you guys. I mean, I get my trades off of the harmonic scanner and the easy SAR. If the harmonic was going right now, I would show you guys. I have the same setups on here. I don't know why it's not working, but I have the same setups on the Trader's Way. I like the Trader's Way because the data feed is really good. And I take, you know how it all sets up here. I usually take the charts off, the the picks off of that. When I get the reversals, I'll take the picks and monitor them right off the harmonic scanner. The harmonic scanner, you guys, has made so much money for me. It's literally the best app, or not best app, but the best software or system I've ever personally ever used in reversals, especially using the bounce back strategy. It goes out and it finds just some cherry setups, and those are the ones I've been trading and following it directly off of there. So that's kind of what I wanted to cover tonight with you guys. I'm going to get in on another meeting when we have some time. I'm going to get in more of more advanced stuff. I know that people are asking for more advanced, but I wanted to make sure we covered as much of this as possible this week, because since we launched the new site, and we will get into more advanced stuff, you guys. I will start talking about correlation trades. I will start talking about stacking. I will start talking about some of those things here in the next little while, but I want to make sure everyone is on the same page. These videos are recorded so you guys can watch them over and over again, and you guys can duplicate this. You know, I'm always available for conversation. You guys can always reach out to me on Messenger. I am on Facebook. I try to get back with everybody as fast as I can. I get stacked up a little bit, but I will respond to everybody as much as possible. But we're having great success with this strategy over and over again. I'm just seeing the hundreds of pips that people are making. Now, if you don't get it, it's okay. Understand, practice, practice, practice. You'll start to see the same duplicating setups over and over again, and practice those same setups over and over, and you will get ahead with this. I've got a ton of messages on here. Hold on, let me pull this up really fast. I got a lot of chats.
Yeah, Eric, what I'd say is just answer a few of like the top questions. I know
I will
question stuff, but yeah, just answer a few.
Yeah, sure, no problem, you guys. I'm here for you. I'll answer what I can. Can we have a translation, please? Well, I don't know anything but English, so I don't know. I can't translate anything, but maybe we can down the road. We'll find out what we can do. Are you waiting for all three MAs to cross before a trade? No, I don't. I just use the MAs, you guys, so I can start to see the trend is starting to move. I don't wait for all three to cross. I do look at them for the momentum shift starting to form. Nothing in particular. I just like to have those. I've traded off those for years. That's the reason why I added them to my charts. How do I handle a situation where the green SAR shows up first? That's a great question, because normally what happens, you guys, if you see a green and a red flip together like that, especially if you get a green one, for me, that's an entry, especially if it's an overextension. If it forms before the red does, that means that the lower support or the upper resistance level has been broken. I do see that happen quite often, and I do add those trades. I go into those trades quite immediately. Let's see. These nuggets are crazy, man. What chart are you using? I'm just using the MT4, you guys. Now, you can set this up also on the web version of the harmonics if you want. You can save that. I don't know much about that. I know a lot of people in my groups are using the web version, and because we have the bounce back Facebook page now, you guys talk to each other, please, because you know what, we've got almost 1,000 people on there. There's a lot. I would say half of the people, maybe over half of the people, are using the strategy now. We've got so many people. Communicate with each other. That's why we created that page. We want it to be fun for everybody and everybody to be able to communicate with each other. So there are people on there using the web version. Just ask, and they will definitely help you guys out with that. Maybe we can do a video on that as well with somebody once they get, once I know and I understand what they're doing, we can do something on that. MACD overlay details. I put that up there. I will actually put a new PowerPoint. You'll have all the MACD overlay details, I promise you. Let's see. Can you put up the indicators list again? You guys, it's on the PowerPoint. I'll make sure that you have it. Just go to the units page on the bounce back, and you can have it all. We don't have a lot of time to cover all that again, but it will be on there for you guys. Let's see. Why did I go from the 1226.9 to the 1226.1 on the MACD? That's the reason why, is because I wanted to do that overlay with the 920 and the 1. Reason why is that way you're not seeing that move coming off of there, Kevin. I wanted to be able to visually have the colors so people could see the colors. Where do I put my stop loss? That's a great question too, Carlos. When I entered the position, I put it above or below the SARs that are above or below the candle, the previous candle. So I enter it there. That's in some of the other videos, you guys, that we have. I will show that more on the additional videos when I get in. Let me show on this chart really fast. So if I were to have entered this trade right here, I'd put my stop loss above. So I would always put my stop loss above here. Even though people will say, well, that's a ways away, it is, but that momentum is there. You know, I would put my stop loss on this when I enter here. I always put it below the lower SARs. You catch that move. But how often we get knocked out? Very, very, very rarely. Usually if I get knocked out on anything, it's a news event. We had some crazy, crazy news this week. We had great setups, and the news pushed everything all over the place. So just know the news. I don't follow news unless it's a U.S. type news, which we had today, and it made some havoc going on. But that is that. So I answered as many questions as I can right now, and we'll answer plenty more on the Facebook page, and then you guys can send me messages on Messenger too. So that's what I wanted to cover tonight, Brandon.